Hello everyone, I am Farsana Tasmin, a student of Department of Banking and Insurance at University of Rajshahi, and my ID number is 113. Today I will be sharing a short overview of the latest monetary policy announced by Bangladesh Bank, which covers the period from January to June 2025. This monetary policy comes at very important time for our country. After some major political changes in 2024, Bangladesh faced several economic challenges. Inflation was very high, the value of the taka dropped sharply, foreign currency reserves were falling, and the banking sector was struggling with a large number of bad loans. To deal with all of this, Bangladesh Bank introduced a policy that focuses mainly on restoring economic stability, control inflation, and improving the banking system. One of the biggest goal of this policy is to bring down inflation. In July 2024, inflation was over 11%, which is extremely high, although it dropped a little to around 9.9% by January 2025. It was still too much for most people. To control this, the central bank has kept the policy interest rate at 10%. That means it become more expensive to borrow money, which should help reduce spending and bring prices down over time. They also keep the lending and deposit rates within a fixed range to manage money supply more effectively. Another major change is the new exchange rate system. Before, Bangladesh Bank used to sell dollars to control the exchange rate, but this often led to a big loss of reserves. So now they have stopped selling dollars directly and introduced a system called the crawling peg, which adjusts the exchange rate gradually based on the market. They also started publishing an official exchange rate twice a day to give the market a clear reference point. This is meant to stabilize the currency and reduce uncertainty. And the policy also focuses on improving the banking sector. Many banks, especially some Islamic banks, are in serious trouble due to non-performing loans. In simple words, this means that a lot of people or business who took loans are not paying them back. To fix this, Bangladesh Bank started a new review process to check the quality of asset in banks, and it's is planning to introduce new laws to recover bad loans. They also offered liquidity support about 3,500 crore taka to help banks facing cash shortages. In terms of credit and investment, the policy tries to balance two things: fighting inflation and supporting economic growth. While private sector credit growth was low, only 7.3% in December 2024, public sector borrowing increased a lot. This created pressure on banks and made it harder for business to get loans. To support small businesses and agriculture, Bangladesh Bank continued some refinancing schemes and gave priority to women entrepreneurs, cottage industries, and green energy projects. Besides this, the policy promotes digital banking and financial inclusion. Bangladesh Bank is working to reduce the use of cash and bring more people into the banking system. Their goal is to make 75% of all transactions cashless by 2027. They have introduced digital credit scoring, new guidelines for private credit bureaus, and are supporting fintech companies to make banking easier for people across the country. However, there are still many challenges. Inflation is still high, the banking sector is under pressure, and foreign reserves are not fully stable yet. There is also a risk that too much government borrowing from banks could hurt private investment. Bangladesh Bank has to work a fine line between controlling inflation and supporting growth. They are also keeping an eye on global risks like price shocks, geopolitical tensions, and changes in international markets, which could affect our economy. In conclusion, the monetary policy for January to June 2025 is strict but necessary. It tries to correct past mistakes, bring discipline to the banking sector and lay the foundation for long-term economic stability. While the road ahead is not easy, these reforms show that Bangladesh Bank is taking step in right direction with continued efforts and strong coordination between the government and the central bank. Bangladesh Bank can move toward a more stable and inclusive economy. And thank you for watching.